welcome to another Water Cooler Wednesday here, presented by Crypto CFOs. My name is Taylor Zork. Today we have a guest host on, Greg O'Brien, CPA. He is from Anomaly CPAs. They do a lot of great work with a lot of tax planning stuff and just client management and things like that. So welcome, Greg. Thanks for joining us.
Yeah, thanks for having me. Excited to talk about some timely stuff with you guys today.
Yeah, so we've hit a lot of stuff on SPF and the fraud trial. It recently came to a close, and on one of my posts, Greg mentioned, like this seems like it's going to be a time bomb for tax related issues as well. And I've been thinking about that since the start of it. So I really wanted to have Greg come on and chat about some of the stuff that we've been seeing. Potential. Obviously none of this stuff has been brought yet, but when we saw things like from the bankruptcy hearings, we saw that FTX was purchasing real estate in the name of key executives, but with company funds. We see a lot of other things coming to light from the fraud trial that may lead to some tax fraud convictions as well. So all this stuff is speculative. So we're just kind of like diving into what we see as the issues here and some of the interesting stuff from that. So welcome, Greg. I just wanted to give you a moment just to give a little bit on your background, and then we can get into it.
Yeah, totally. So thanks for having me again, guys. So I'm the co-owner of Anomaly CPAs. We are personally in Boston, Mass. The team is remote, so we have people in about 15 different states, work on a variety of issues with mostly digital entrepreneurs. So their industries vary, but everyone that's kind of in the working through the cloud. We also have a specialty in real estate as well. So work through a lot of those issues, and then particularly I stay up quite a bit on anything that's in the tax news and tax court cases and things like that as a kind of a hobby. And love talking about this kind of stuff. I think there's a lot of lessons that can be learned in going through these things. And interestingly enough, I recently interviewed Chuck Reddick, who is the IRS commissioner under Donald Trump. So he has a unique perspective on this kind of stuff as well. And I learned a lot about crypto from him, right? He was the top dog at the IRS for 4 years. And then I also heard recently at a conference, Jim Lee speak, and Jim Lee is the head of IRS criminal. So he's probably the second in charge at the IRS. So interesting insights, right? What they're allowed to say that I gained from this. And I think it gives me a lot of insight into what is going to happen here with the FTX stuff, both from a consumer perspective, but also from key players involved here. And they might just be at the start of their troubles.
Yeah, so I mean, a couple of interesting things to highlight here is, obviously a lot of people on this call know already that SPF was convicted on all 7 counts of both fraud, wire fraud, conspiracy to commit fraud. There's a number of different things, and I think he's facing like 115 years in prison. But one of the things that kind of blew my mind about this case from the beginning was that both of his parents are lawyers, and Greg highlighted that his father has a specialty in tax. So the thought that they're all wrapped up in this so kind of like intertwined, and it's just so deep, it's kind of mind-boggling to think about. So just kind of starting off, what do you see as some of the kind of potential tax issues that could come out of this based on what we found out in the fraud trial?
Yeah, I think a couple of things. So I think that obviously Sam gets all the attention, but he is not the only person that has issues here. So I would say Sam, mom and dad, Gary Wang, Caroline, they all have problems here. And one interesting thing that I found that a lot of people haven't seen yet is that in the plea deal that Caroline Ellison struck with the federal government, it says this. It says, if the defendant complies with the understandings of this agreement, the defendant will not be prosecuted further criminally by this office for any crimes except for criminal tax violations related to FTX. So they carved tax out of these plea deals. I think the reason they did that is frankly because they're not sure what happened yet, right? There's a lot of complications behind the scenes, as everyone probably can guess. So that's one thing, right? That kind of they put that in there specifically that all crimes are waived except for potential tax violations. So she's not off the hook for that. Number two, I think even more than Sam, his mom and dad have some problems here, because as we get into this today, you'll find out that the father's not going to be able to plead ignorance on a lot of these issues. He is as Taylor alluded to, a renowned professor from Stanford. He specializes in tax law. And he's actually written several books on tax evasion and different things. So very, very, very often in tax cases, people plead ignorance and we didn't know what we were doing. We listened to the accountants, listened to the lawyers, blah, blah, blah. But there is a civil lawsuit going on in which discoveries happened, and there's a lot of emails floating around out there, which we'll mention some of them today. That you'll see that the father is very aware of what he's doing. He's very nifty in some of the stuff he does, and maybe it's legal, maybe it's not legal, but he's very aware of what he's doing, and I think that's going to ultimately cause problems because oftentimes in the tax world, criminal tax, they look to intent, right? They look to, hey, was this just a gross, mistake that we're going to charge a lot of penalties on, or is this criminal intent? And I think that for him, he's going to have a problem around that if the government wants to ultimately pursue it. So those are some of the issues, and it's some of the topics that we're going to come up here are number one, commingling of funds, right? So customer funds were undoubtedly used for personal enrichment, and it's highly unlikely those are reported for tax purposes. Number two, hundreds of millions of dollars of loans, right? Quote unquote loans, I say, that are likely disguised compensation. Number three, assets, including real estate, being purchased with company funds, which is a problem, that was used 100% for personal use. And number two, it looks like these funds were used from customer deposits, right? So those are just a couple issues that are very serious issues beyond all of the other little things we could probably dive into that they probably weren't doing properly, such as private jet trips for the father and the mom, right? That were paid for the business, luxury hotels for them that were probably not done properly, the funneling of customer funds into their foundation, which ultimately supported causes of the parents, right? So when I've gone through all this stuff, my biggest takeaway is that the parents probably have the largest tax problems here from a criminal standpoint if the government decides to pursue it.
Yeah, I thought that that was really interesting. You mentioning about the people who have plea deals, the tax side of things being excluded because you know that could be the biggest part of this. From when we take a step back, and I'm just curious. Do you think that these people were aware of the potential tax issues? I mean, obviously they had to have been from the council that reviewed these plea deals, but how do you think that they just are kind of like biting the bullet on this and just kind of kicking the can down the road, or do you think they are aware of like the scale of some of these potential charges against them?
Well, I think they're aware, and I think that from the government's perspective, right, there's no need to rush these type of things because tax evasion, tax fraud, there's no statute of limitations on, right? So they don't
Mm-hmm.
need to rush under the gun of, hey, 3 years, because likely they would pursue criminal charges for evasion, which there's no statute to hold them to. So that's number one. Number two, criminal tax matters have a maximum sentence of 5 years per charge. So
Okay.
they're probably going in order of priority here, right? The fraud charges are far more serious from a criminal sentencing standpoint. And I'm obviously not a lawyer, so I don't know the statute of limitations, that kind of stuff. But those are the probably a little bit easier to prove as well. You get into this tax world, right? There's a lot of stuff you'll see that is like it's gray, right? Is it illegal? Did they know it's illegal? And it's going to take harder. It's going to be harder to pursue. You need to work with a specialized group at the IRS of these criminal tax agents, which there's only 1,200 of them. And from my understanding, in the crypto world in criminal tax, we're talking about a handful of people that are pursuing these cases. So as you can imagine, there's a lot going on there. But I do think that they likely will do this. And one of the things I've learned from both Commissioner Reddick and Jim Lee, they like the IRS and the Department of Justice has a 99% conviction rate on tax charges. Imagine that, right? 99% of the time. Why is that? They generally get people to plea out before they get there because as the accountants here know, tax charges, once they lay out the facts, right? You're tracing money, it's very provable. And once they do that, they generally come to the table and say, hey, look, you're facing 5 years. You can plea out for 1 year and a big fine, right? So they avoid having to go to trial. When it goes to trial, the IRS / the Department of Justice will likely win, right? They almost always win. So all that being said, they're not rushing these type of things, right? Because they have plenty of time to do it. And they probably likely are working out their deals in the back end with people to make sure that, people have an opportunity to plead guilty to things which they think are criminal.
Mm-hmm. Yeah, super interesting. I think that it's going to be hard to prove that they weren't a lot aware of a lot of things just because of the involvement of Sam's parents as well. And you hear about them being in the room a lot as well. So, you know, having basically legal counsel around all the time, you know, maybe there's you can't prove intent because of that, or you can't kind of disprove negligence, but at the same time, you know, their involvement as well kind of muddies the water as well. So,
Yeah, I mean, ultimately that is a big problem for them, and I think people have heard this, but the famous thing that came out, so like right now the bankruptcy trustees, right? So like it is technically is FTX. They are suing the parents personally for all of this to collect. They want to claw back all of this money, and a lot of emails came out right in discovery. It's a civil trial, but there's a lot of good nuggets in there. Of course, they're just accusations at this standpoint, but there's emails, and you read through some of that stuff. It's very obvious that he had a lot of sway and influence. In fact, the father actually handpicked both the law firm and the accounting firm that they ended up working with. And as people know, right, they weren't, working with Big Four here. So he picked a lot of that. And they said in this indictment that he ultimately was in charge, right, of their tax matters at the corporate level. One of the damning things that came out about him was that, he was making this very modest $250,000 salary or so. And he sent this email and looped in his wife and said, I'm disappointed in this. I think I should be making $1 million. Within a week of that, there was this complicated exchange, and they quote unquote gifted him $10 million from FTX accounts, right? It went through a web of transactions to get there, but it went there, and there's actually an email with the counsel saying, hey, this should be structured as a loan to Sam, and then he can gift this to you, right? So all sorts of technical tax problems with that, the way they did that. But the counsel actually admitted in the email, this is the best strategy or structure to do this to avoid tax issues on this. And dad responded very wisely, as anyone does that thinks something's going to come out in a criminal issue. And he said, thank you for this gift, Sam. Right. So he made it very clear the intent was a gift. And it kind of made me laugh because I don't feel like people actually talk like that. So, all that being said, when you look at everything from an outsider's perspective, it seemed very obvious to me they knew what they were doing.
yeah, yeah, that's so interesting. And to try to their awareness of how to structure this in a way that would potentially save them money on taxes, and then his awareness there to make a comment like that. That's obviously, again, it doesn't prove it, but it kind of paints a picture for sure. So one other thing that when we were going back on topics to discuss in this, you brought up massive net operating losses. Do you want to talk about a little bit about that and how those might kind of come into play here?
Yeah, so this is a big it's a big mystery, right? Because obviously they're a private company, their tax returns aren't public, so this is the limited stuff we know. But what we do know is that some of these bankruptcy proceedings and motions that have been filed, SBF was out there himself saying how profitable they were, which they could have been from a book perspective, right? We don't know that, but what we did find out is that they had a $3.7 billion net operating loss carry forward from 2021 to 2022. So the complicated part of that, right, is there's, I believe, hundreds of entities at play here. How this all rolls up. So when they say 3.7 billion, I don't know what entity that's at. They didn't specify, but we do know there's a massive NOL. Now, one theory out there has been that a lot of this comes from Almeida, and ultimately Almeida was probably a full-time trading company, and they were able to use trader status, mark-to-market accounting, and they were able to basically use the whole crypto loophole, wash sale loophole here, and accrue these losses. So there's one theory that, hey, it's legitimate. They were using good strategy here, and they were accruing these losses for tax purposes, right? So that is possible. There's another theory that it's just not legit, right? And they were doing all of this, they were using all these funds for personal purposes and funneling money to various causes. So these are all illegitimate losses, right? So that the IRS could potentially go back and reverse these. Now, what's interesting about this is how does that relate, right? So as people may have heard, the IRS in the bankruptcy proceedings stuck their flag in the ground at the beginning and said, hey, we are taking first priority here over anyone else because we're the government for $44 billion. Now, my understanding of that, what's called an administrative claim in bankruptcy, is that they are using reasonable estimates to estimate how much money they believe is owed to the Department of Treasury here. $44 billion is a lot of money. And what's complicated about it from our perspective is that these were all partnerships from what we believe, right? So partnerships don't themselves pay taxes. There might be some foreign withholding issues here that are at play. We don't know. But $44 billion is a lot of money, right? And we know that about 130 million of that was related to unpaid payroll taxes, which is a massive red flag uh, for tax fraud. So if they had 3.7 billion of NOLs, how can they owe $44 billion, right? So like something doesn't quite add up here. And it quite frankly could be the IRS said, hey, look, we don't believe this. This is all hogwash, these NOLs. We're going to just assume we're reversing all of them. So that is unknown at this point, right? So that's just an interesting fact that has come out here. The second thing to realize with this $3.7 billion is I believe the FTX bankruptcy, the bankruptcy proceedings, they want this NOL to stay. Why? They could potentially go through a corporate restructuring, right? Because the entity is going to live on and there's going to be some restructuring. They could spin off this entity wherever that NOL lives, and the acquirer, through some different means, could acquire an NOL, which would produce liquidity for investors, right? So ultimately the guy in charge of this bankruptcy on the FTX side, he is going to use that to his advantage if he can, because those losses are worth something to somebody, right? So through a complicated spinoff and merge, it's possible to get that. So an NOL is a net operating loss. So essentially, when a business loses money, right? If it's an active trader business, you're going to get what's called a net operating loss if it goes beyond your income. So it'll carry forward with you. So if you have $1 million of excess business losses, they're going to carry forward on your tax return with you. So the confusing part here is that in the media, they're claiming that we were making hundreds of millions of dollars, but on their tax return, they lost 3.7 billion. So of course,
So
something doesn't add up here.
what that means, Lord, is basically is that they can offset future taxes with that net operating loss, carrying it forward. When I first started my career at PwC, I was working on special projects, tax projects, and I worked on NOLs a lot. And back then, you could carry back 2 years as well. I'm not sure if that I haven't been up on to it on the rules recently, but now you can carry them forward. And you could back then as well, but you can carry them forward to offset future taxes effectively. So if an acquirer purchases you, they get that benefit of your net operating loss that they can then apply to their profits.
Exactly, Taylor. So I would look at it from the bankruptcy perspective, right? It's an asset. It's actually an asset on their books, right? So they need the bankruptcy trustee ultimately here needs to figure out, how do I liquidate this, right? And the easiest way to do that is, there's massive corporations out there and these complex hedge funds that want to acquire NOLs. And the confusing part is, right, they're probably going to have to wait for the IRS to say what they're going to do here before they can make a move there. But so that's an interesting standpoint. Now, the other thing that's a little unfortunate too, right, is that I think it's a double-edged sword, right? If they allow this NOL to go through and they allow the liquidity of it, ultimately it helps the retail investors, right? Because someone's going to buy it. They're not going to pay. You won't pay 3.7 billion for a 3.7 billion dollar NOL. You'd pay 80 cents on the dollar, right? Something like that. But it would produce liquidity that could help pay back investors. So it's a double-edged sword, right? Does the government want to help these retail investors that are screwed right now, or do they want to collect every dime for themselves? So that's to be seen.
Yeah, and I find it hard to believe that they were accounting for all of this correctly, just based on the fact that they didn't have like a formalized accounting department internally. So I'm inclined to believe that it's the latter, that it's just like it's all hogwash. I highly doubt that they were scrutinizing this all and got it all right for hundreds of entities when they really didn't have a formalized accounting department.
I mean, on the accounting side, Taylor, I mean, I believe when this all first happened, I forget the gentleman's name that became the bankruptcy trustee, but they were literally using QuickBooks Online. Like, no offense into it here, but a multi-billion-dollar business does not run on QuickBooks Online. In fact, it breaks around 50 million. So again, like, there's a believability factor here to all this kind of stuff. And in some of the quotes I have that I can read, like, there are transfers of transfers of transfers, right? And then it ends up coming out for example, the gift to the father, it ultimately came from company funds. It's not recorded in the accounting system anywhere, right? Like, it just poof disappeared. Like, double entry accounting doesn't let that happen, right? So it had to go somewhere. And that's what they're trying to wind out right now. But they were just willy-nilly doing things. So there's also the theory, Taylor, like you just alluded to, is that it's all BS, right? Like 3.7 is just an estimate, and they were just winging things. And ultimately, they probably said, "Hey, you know what? This is so complicated. Good luck to the IRS trying to figure it out."
Which is what a lot of people do in the crypto world. Is they
Mhm.
assume that the IRS doesn't know how to handle it, so the IRS will always not know how to handle it. And even if the IRS doesn't know how to handle these things in this moment now, as you alluded to earlier in the call, if it's tax fraud, there's no statute of limitations there. If your difference, I think, is 25% or more, it extends the statute of limitations as well. So um,
Yep.
just assuming the IRS isn't going to be able to figure this out, whether that's true or not, doesn't really matter. But as Lourdes talks about a lot, there's a lot of on-chain analytics firms that can help you identify this data pretty easily, and you better bet that the IRS is paying for these services and paying for that data as well. So, yeah.
Well, that's a good point, and not to get off topic, but I just recently, last week or the week before, I learned this from the IRS criminal guy that every year the IRS does what's called it's like a hackathon, right? The G7 countries, so U.S., Australia, England, the Netherlands, and Canada, they do this hackathon around crypto where public-private partnership. They get a bunch of smart crypto people, engineers in a room. They give them data sets and they say, go find fraud. That's what they do. And they don't disclose what exactly has come out of it, but they did say that they have uncovered billions of dollars of fraud from doing this. So they have realized their own limitations in that they don't have the employees internally in the Treasury Department to do this. They are using these public-private partnerships now to find fraud. One of the things that they both mentioned to me is that, look, they said, yeah, do the majority of the IRS auditors out there understand this? Absolutely not. But do we have the sophisticated technology and resources at a small group to take down the largest crypto frauds? Absolutely, right? And IRS took down Silk Road on their own. In fact, the IRS holds the highest percentage of cryptocurrency of any government department, right? So they mentioned to me that they can't just sell their crypto because they could move the markets, which how much crypto they currently have in their coffers, right? So, and he said something. Commissioner Rex said something like they face hundreds of millions of cyber attacks per year from North Korea and Russia because they know that they have all this crypto, right? So they get a lot of good at this stuff, but like at a very specialized level for like something like this trial, they will put their best resources on trying to figure out, the truth here.
Mm-hmm. Yeah. Very interesting stuff. Yeah, I'm glad we did this, Greg. It's good to connect on a webinar here, and I'm impressed by your knowledge of the crypto world. Being, obviously it's a passion side project for you, like just following up on this stuff. But your specialty is real estate. I can't only imagine what you know about real estate. So really appreciate your time here. And if anyone needs help on real estate tax issues or anything like that, hit Greg up. Anomaly CPAs do really great work, and they're a great firm to be connected with.
Yeah, and what I'll say for people, if you are interested in this, just Google the lawsuit against the parents. There's a treasure trove of stuff in there. Again, they're all accusations, but you read some of the stuff and you read some of the stuff about their Bahamas house. It's eye opening, right? And kind of gives you an insight into how things worked there. So tons of good stuff out there. But yeah, if anyone wants to connect, you can hit me up on LinkedIn or Greg at anomalycpa.com.
And one last plug is for those of you on the call who aren't members of the community yet, we have a upcoming CPE event called a trip around the cryptoverse. Which, if you even if you are involved in the crypto industry already, this is a really great tour around DeFi. We start by on ramping crypto onto Coinbase, and then we go through the process of opening up a non-custodial wallet. We do DeFi swaps. We do lending and borrowing transactions. We do LP liquidity providing to a decentralized exchange, NFT purchase, and then we reconcile it all manually. So really good way to get your foot wet in crypto just in general, or to really solidify your DeFi knowledge. So that's coming up on the 14th of November at 1 p.m. It's going to be a live CPE event. You'll get 3 credit hours for that. So all members get access to CPE events if you're a pro member, and then or you can just purchase the course itself alone. But hop onto the link that Brian just provided. I think that Lourdes had a question before we finish the call. No, okay, all right, great. Well, again, thanks, Greg, for joining us. Really appreciate it. And if anyone else has any additional questions or comments, let us know. We can stick around for a couple more minutes, but otherwise, yeah, we'll end the call.
Awesome. Thanks for having me, guys. Look forward to connecting again soon, and take care for now.
Yeah. All right, guys. Take care, everybody.
Have a good one.